Okay, let's get the first conversation of the morning going. Adrian Mowat is with us. Of course, he's a keen watcher of the emerging market space across Asia and including India. Adrian, good morning. Always a pleasure having you on our shows. So it's a very interesting situation we find ourselves in, at least in the last couple of trading sessions, where India seems to be going through a mini melt-up. We're adding 100 points a day on the index, literally. Whereas the rest of the world markets are waking up to the reality that we're probably seeing more rate hikes this year. How do you sort of view both sides of the spectrum, both sides of this equation?
Yeah, let's start with India. So I think there's a couple of things we should highlight about India's better fundamentals, both at a market and at an economic level. So if we look at your economic data, inflation, although high, is trending lower. Manufacturing is expanding, which it is not doing in the rest of the world. The PMIs that recently came out from India were strong. When you look at the market technicals, you've got 42 out of 50 of the Nifty stocks are up year to date, some of them very substantially, like the auto companies. When you look at the story in the United States, the equal weighted indices rather than market cap weighted indices for the S&P is basically flat year to date. So you've got a bull market at the market cap indices level, but it's not a very broad market. Now, when we look at the US economic data, I think in many ways it remains quite encouraging. And you're introducing with the story in the labor market, and clearly this non-farm payroll print is going to be very interesting. And I think the story in the US is the chances of a recession and a hard landing are diminishing unless the central bank gets very aggressive and puts on quite a few extra rate hikes. What we need to appreciate in the US is the labor market is good, which means the consumer has money. The lower income groups are relatively confident that they can find another job if they lose their job, so their confidence is higher. The upper income groups are enjoying a stock market rally. Their cash is yielding a much higher return than it was. And most households in the US, the majority don't have a mortgage, and those that do have a mortgage have fixed mortgages, so they're less sensitive. So I think this story of there's going to be a recession in the US may never come about. But the other side of that is this expectation that US rates are going to be trending lower in the next 12 months may prove to be wrong. I think it's much more likely that short rates move a little bit higher and plateau at those levels, considering the strength of the US household sector.
Adrian, morning. So let's take this narrative that the US economy continues to remain strong. There is no cool off in the labor market, and US economy can skirt a recession. We do not see a recession. As you pointed out, the chances of a recession are diminishing. That's on the economy. And on the other hand, we see 2 more rate hikes by the Fed, as the Fed has been steadfastly maintaining. So no recession and 2 more hikes. In that event, how do you expect the US markets equities to play out over the next 6 to 12 months?
So I think US equities will move higher, but near term, I think markets are going to see a bit of a correction in the US. So we've had a very powerful move in a narrow group of stocks, NVIDIA more than doubling this year. And I think some of the froth will come out of that. When we look at the results season, which starts with JP Morgan's results today, the outlook for investment banking earnings looks very poor. And perhaps we see a little bit of weakening in the banking sector, even though they are making more money in terms of net interest income in their basic retail banking. And I think the numbers coming out from the manufacturing sector may also be weak when you move beyond the tech sector. So I think you should expect some weakness in US equities through the third quarter. But then I think there'll be a fair amount of optimism looking into 2024 as we continue to see headline inflation move a bit lower and the pressure on the Fed moderating. And we have an expectation that interest rates will stay at current levels. Now, part of that actually, maybe long-term rates still need to move up a little bit higher from the 4% level. So I'd be long, US equities, but be looking to add maybe more towards the end of the quarter. We've got a good story out of Japan. expansion there, nominal GDP expanding, and Japanese equities in local currency terms doing well, although the yen has been notably weak. And I think in Europe, they've still got a bit of a tailwind with the decline in energy prices, which is very meaningful considering that was the major headwind in 2022. So I'm optimistic about equities. I think within the emerging market space, the data coming out of India is clearly a lot more encouraging than data coming out of China. And remember, the other big data point this week beyond the US labor market was the Chinese service sector PMI, which is still in expansionary mode, but has deaccelerated. So the confidence around the Chinese economy and its recovery from the COVID restrictions continues to decline.
Hi, Adrian. Good morning. Nigel on this side. I wanted to ask you, how do you approach the Indian markets, though? You've told us about the global markets as well. Where does India come in the pecking order? And I ask you this because now, on a valuation basis, we're trading at a little bit of a premium, in comparison to what we were trading a few months ago. How would you view this? I mean, we have plenty going for us in terms of economic data, political stability as well. So your view on the Indian markets, and where does it come in the pecking order?
Yeah, so I was making this comment about how the US rally has been narrow. When you look at the valuations of an NVIDIA or even a Microsoft at these levels, investors where they see a positive fundamental story are willing to pay high valuations. Now, I think India sits in this macroeconomic story of having the highest economic growth of any major economy. It's got a moderating inflation number, and data like the PMI is surprising positively. And you've got a broad rally in the market, back to this 42 out of the 50 nifty stocks are up year to date. So it's very different from the rally that we're seeing in the United States. So I think investors will continue to be comfortable. The market's moving higher. The data is strong and looks better than other places. And for that, you're just going to have to pay a premium, right?
Okay, thank you very much for that. MSCI India is currently trading at a near 100% premium to MSCI emerging markets. Adrian, thank you very much for joining in. Get into a break. On the other side, our list of top stocks is lined up next.